I got a DM last week from one of my subscribers and they asked me to make them personally a budget with a $5,000 per month income. Don't worry, fam. I got you. Let's build this budget. What's up, y'all? This is your boy, Kenny Finance, and today we are doing something special. We are building one of our lucky community members and subscribers a $5,000 budget, and we are going to show them how to do everything with regards to managing their spending and their investing. We are probably going to build them the world's most fire investment strategy. And we're also going to show them what it looks like if they stick to this plan long term and the wealth that they could be building. So let's dive right in. So if we're working with a $5,000 per month income, that means $60,000 per year. First and foremost, you're making what the average income is in America. So congrats. A lot of people may make less, a lot of people may make more, but look, this is your life. Focus on what's in your wallet, what's in your income, and let's build something that works for you. So I don't know where you live, but I assume that you probably have a tax rate of around 25%. So that means that our after-tax income is about $3,750 per month to work with. So that's our starting point. Let's build from there. So first things first, we got to establish a budgeting foundation. And for that, we can use the simple rule of 50-30-20. 50% of your income is used towards your needs, paying house, food, medical bills, etc., all your essentials. 30% usually is for your wants, meaning you're dining out, your gym, etc., and then 20% for your saving and investing. That is what everyone in the entire world should follow for a proper budgeting framework. But you didn't DM me asking you to build your budget to follow the norm. We're about to spice it up a bit. So here's the Kenny Finance budgeting remix to 50-30-20. So the remix to this budget rule, what we're gonna do is we're gonna swap the 30% for your wants, replace that with 30% towards your saving and investing. That's right. So 50% of your income is gonna be spent towards your needs, 30% towards saving and investing, and then 20% is going to be used for your wants or non-essentials. And if I could increase that saving and investing as high as I possibly could, we will do that. But sometimes people need to splurge on little things and keep themselves incentivized to keep going. So we're just gonna make it 20% for your wants. But that's an area that we can cut. Remember that. So what does that leave us with? So that means 50% for our needs. That means we can spend $1,875 on our needs. And let's just assume that you can afford maybe $1,000 to $1,200 for rent or your mortgage. I would not recommend spending any more than that because then you're just overstretching. But try to spend between $1,000 to $1,200 for your rent/housing expenses. And the rest of that, make sure you have a very sound budget for your food, for all the other essentials, and make sure you have your medical bills paid for, whatever that may be. And if you're thinking about food, I highly recommend that you meal prep and buy a bunch of groceries in bulk from affordable grocery stores like Trader Joe's or Myers or what's another one? Aldi's, right? They have similar healthy food options that you can buy in bulk and that you can meal prep instead of wasting your money dining out all the time or buying from expensive grocery chains that may be pricing way too overpriced for certain goods and produce. Next, for saving and investing, that 30%. That means we have $1,125 that we can spend towards saving and investing. And I will get to that later. Let's skip to our wants. So for our wants, that means we have $750 that we could spend on our wants. And that is entertainment, dining out, buying clothes, whatever that may be. And I highly encourage you to have this as a last resort. Try your best to be frugal. Try your best to dine out less and cook in more. Try your best to look at entertainment that is at home, like Netflix or Hulu, or watching YouTube instead of having to go out and watch things outside or spend too much money at a bar, etc. Find ways to entertain yourself and keep yourself extremely fun and engaged and living a vibrant life for free. All right, there's a million ways you can have fun for a low ball price. So find some ways to unlock that, because that $750 we could either use to put more into our needs bucket. If you want to have a bigger house, you want to take care of unexpected expenses, or you can use it to invest and save more. So let's use this $750 and try to figure out ways we can just reallocate that. Now, jumping towards our saving and investing. Like I said, we have $1,125 to work with. And what I recommend us doing for this FIRE investment strategy is follow two core portfolios. Number one, I want you to max out your Roth IRA. And what is that? And Roth IRA is an individual retirement account that is essentially tax-free because it's Roth. And what you're doing is you're putting in after-tax dollars into this Roth IRA and letting it grow over time, because when you pull it out at retirement, since it's a Roth account, you get to withdraw that money tax-free. It's a real cheat code. Now, what I want to do is max this out. And the max is, I don't know what the current is this year, but usually it's around $6,000 per year is what you can contribute to that Roth IRA. So that's $6,000 per year, breaking that down per month, meaning we have to put $500 per month into that Roth IRA. And once it's in the Roth IRA, it's typically across a bunch of diversified investment portfolios, etc. So you're already set there. But let's just make sure we hit that $500 per month target into our Roth IRA. Next, we have $625 left. So what we're going to do with that $625, we are going to build a diversified portfolio of ETFs, meaning exchange traded funds, which is essentially a basket of stocks, some of your favorite stocks, maybe some bonds in there, some mutual funds, etc. Try to build a very diversified approach. And if you want to have a very hands-on, like, I don't want to know about what's going in there, I just want my stuff to grow at 8-10% plus, find your robo-advisors. There's a bunch of those like Robinhood, Betterment, Acorns, etc. But there are ways to sort of put your money into a diversified stock portfolio so that you can hit a solid investment return, and try to do that with that $625. And if you follow that simple investment framework, we are having $500 per month going into our IRA. We also have $625 per month going into our stock portfolio. That is a baller approach towards managing your money. And if you think about that on an annual basis, you are saving $6,000 in a Roth IRA, and you're also saving $7,500 in a stock portfolio, meaning that you are putting away $13,500, if I did the math correctly, on your investment account. That is a fire habit, especially if you're only making $60,000 per year. I like that. And I haven't even touched what the returns could look like once you put those dollars into the markets. All I'm saying is build the habit of putting away $13,000 plus each year into proper portfolios, and then let the stock market work its magic. Now, I'm not saying that magic is guaranteed. There is no indication of future returns are guaranteed at all. Everything's a gamble. But what I am saying is that on average, it's been like a 7 to 10% return in the stock market every single year. So let's just assume that math for our long-term projections of what this portfolio could look like. So let's look at the IRA, for example, which is going to be taken out tax-free, by the way. If we hold it for 30 years and we are putting in $6,000 to max out the account every single year, and we get ourselves a 10% return, we are looking at, in 30 years, a $1.1 million account value in 30 years. You're a millionaire. Congrats. We balled. Next, let's see what the stock portfolio is going to do in 30 years. So we're putting away $7,500 every single year. And let's say we're getting a 10% return. In 30 years, my lucky subscriber, you are getting $1.4 million. You're a millionaire times 2. You're really balling. So with that, you're having a Roth IRA account of $1.1 million in 30 years. And you're having a stock portfolio of $1.4 million. So you're looking at a $2.5 million portfolio just of investments that you can start working with. And look, if you want to hold it in there, that ball game is getting even higher. Just imagine 10% return on $2.5 million. That is $250,000 per year. 4 times higher than your annual income. I'm not saying I'm working miracles out here, but we're making some magic happen. So that just shows that with 30 years of hard work and discipline, you can be making more from just your investments than your day job. Now that, my friends, is called true wealth, because you're having your money work for you. And you can unlock yourself more time. You don't even have to work anymore, probably. You're chilling. But what I encourage you is keep your money invested in the market as long as you possibly can and take advantage of that compound interest. So all you got to do is just stay committed to maxing out that IRA, as well as using whatever money you have left to put it into the markets and invest it and build other stuff. And just say, for example, once you hit that 30-year mark, you have 2.5 mil, you have $250,000 per year and investment returns, you can start buying properties, you can start buying businesses, you can start doing a whole bunch of stuff. But bear with me, we got to start small. So trust the process, invest early, invest regularly, and let that stuff work for you. I don't know what else to say to you. The math speaks for itself. All I know is we took our subscriber that was making $60,000 per year, $5,000 per month, and we built them a very concise approach towards budgeting their money, cutting their expenses, and making sure that they allocate as much as they can towards saving and investing. And that portfolio we built, I'm gonna start charging you off of that. But if you want to take your income game to the next level, I got videos for that. Passive income. If you want to take your expenses game to the next level, I got stuff for that on how to figure out how to unlock and slash some of your biggest money wasters. Look, I'm here to help you as much as you possibly can. I wish I can give you a virtual or physical hug, but right now we're virtual. So I'm giving you a hug and saying, hope that budget helps you out and takes your money to the next level. Because look, that is all that I'm here for. And that's all I'm here for the rest of my subscribers as well. So make sure you guys hit that subscribe button. If you like this, leave me a comment. Let me know what other kind of videos I should make that's personalized for you. Maybe I'll do something for someone that makes even less money or someone that makes even more money. I got more of this stuff coming soon. So make sure you guys check out the rest of the channel, support the platform, support each other, and I'm here for you guys every step of the way. Peace.